Welcome back. Good Friday morning, everyone. Thank you so much for joining us this morning. I'm Maria Bartiromo, and it is Friday, December 5th. It is 8:01 on the East Coast. President Trump hinting at his choice for the next chairman of the Federal Reserve in the Oval Office this week. Watch.
It's a great group. And I guess a potential Fed chair is here, too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
White House National Economic Director Kevin Hassett seen as the frontrunner now to replace Jay Powell. The others, Kevin Warsh and Christopher Waller, are there, and we are all waiting on the answer. President Trump and the White House heavily criticized Jay Powell in recent months for not cutting interest rates fast enough to combat inflation and allow growth to resume in the economy. Joining me now, the man of the hour, White House National Economic Director Kevin Hassett. Kevin, it's great to see you this morning. Thank you so much for being here. And I want to get your take.
Maria, isn't it amazing to see the snow behind the White House with the Christmas decorations? I mean, oh my God, what a beautiful building, right?
Oh yes, let's talk about the snow. Oh, you are great. That was great. Now, Kevin, look, congratulations. You've had an incredible career. We are expecting to hear the announcement from the Commander-in-Chief soon in terms of whether or not you'll take the Fed job. But I want to get your take on really the macro story and what the Fed is looking at or should be looking at. Interest rates this morning are up, Kevin, even though investors are pricing in an 87% chance that the Federal Reserve is going to cut interest rates next week at the December meeting. So what are you expecting for the meeting next week? And what do you believe the Fed should be focused on right now?
Right. Well, yeah, thanks again for having me back, Maria. The thing is that the data are missing a little bit, right? Because of the government shutdown, we went a couple of months without the kind of data that policymakers in the White House and policymakers at the Fed want to see to make sure that they've got a real strong handle on what's going on. We've seen some anecdotal reports, like through the ADP releases, that the job market might be weakening. At the same time, industrial production's at an all-time high. We've got GDP growth in the 4s for the last 2 quarters. And so, our expectation is that the government shutdown had a bigger negative effect on the economy than we expected, but we're going to have a bigger rebound in the first quarter. Against that backdrop, it's a good time for the Fed to cautiously reduce rates again, and that's what I expect that they're going to do.
Yeah, it's a great point to make because of this shutdown, but I think in the middle of all of this politicking around the shutdown, there's a new concern emerging about jobs. And it's really not about policy necessarily or about an economy that is slowing, because we know we're going to see a big impact from the big beautiful bill next year. But Kevin, it's really about AI and the fact that artificial intelligence is going to create efficiencies that will mean a loss of jobs. And look, I get that we're going to see new jobs. I know that all technology changes require new training and new jobs. But what is the White House's message on AI efficiencies? What is the plan to come up with the proper training for people to thrive in this new world?
Right. Well, the best part about what we're seeing in the evidence, and there's an institute, my friend Eric Brynjolfsson at Stanford, former colleague over there, has been studying these things like pretty much there's a new paper every month, that there's a lot of good news in the AI space. And I would say that the best news is the way to think about what AI and its agents can do is that they can act as if they're like the best coach you ever had for whatever job you have. And so while you're trying to figure out how do I make my boss happy, how do I do what it takes to make the firm successful, it's like you've got a coach right there with you every step of the way. And so we're seeing that, first of all, the coach is good at, you don't have to, learn a new software code, a new programming language to get this to happen. You've got a coach right there helping you be productive. Now, the second thing that we're seeing is that because of the really big increase in productivity, I think we could be looking at a 4% productivity increase next year, given how much acceleration there is in AI. Then what happens is that workers are able to produce as much stuff as the firm needs without having to hire a whole bunch of new people. And so we're seeing that recent college graduates are feeling stressed right now. But our expectation is that this is something that's going to work out quickly. The AI economy is moving much faster than the dot-com economy of the 90s. And the coaches that AI is producing are going to help make a lot of productive workers a heck of a lot of money. And the bottom line is that we're seeing that real wage growth is really high again this year after, being down 3,000 $200,000 during the Biden administration. And so all this productivity is putting more money in people's pockets.
Yeah, the productivity is a great point. That is one of the major drivers here of things. And of course, we're expecting a big impact from the big, beautiful bill in the early part of next year. So what are your expectations in terms of growth in the first and second quarter as we see things like expensing for businesses take effect, as well as all of the other new tax changes like no tax on tips, no tax on Social Security, Kevin?
Right. Well, what we're going to see next year is, remember, when you have productivity growth like 3 or 4, then that's kind of the growth rate that you start at. And so that if you have a capital spending boom, President Trump talks about the $18 trillion in spending that's coming. We've been following groundbreaking in new big factories in the U.S. We're up to about 20 over the last 2 months. So there's a massive amount of momentum coming into next year. And against that backdrop, what we're seeing is that the people who have no tax on tips, no tax on overtime, no tax on Social Security, all of those folks didn't have their forms changed this year because the IRS didn't have time to do it because we passed the bill in July. And so they're going to get huge tax refunds in the first and second half of the year that's going to feed the demand that you need from all this higher productivity from AI. And so I think that we're looking at one of the golden years in American economic history, provided that we don't get some kind of random black swan disruption.
So first and second quarter, what, 3%? What are you expecting in terms of growth?
I would be disappointed. 3. I would be disappointed with 3. I think it could easily be 1% higher.
And of course, that's what.
And without inflation, without inflation, because it's all supply side stuff. Right, think of all the factories, the groundbreakings, all that stuff. Increases supply, puts downward pressure on prices. Productivity booms, by the way, Maria. Sorry, I'm speaking up. The snowblower guys are going back and forth.
I appreciate it. Yes, I know. I see that.
So the other thing is that you can remember back in the 90s, there was a period when I worked with Alan Greenspan that was parallel, where because computers were starting to increase productivity, that there were a lot of people at the Federal Reserve that wanted to raise rates because unemployment was so low. And then Greenspan was, no, we don't have to do that because this is a productivity boom that's a supply shock that puts downward pressure on prices. And so he kept rates low in the 90s. And that's when we had the 3-4 years of amazing economic growth because the Fed didn't take away the punch bowl. And I think that given the data that we're seeing, the AI is a more powerful productivity source than the computer, that kind of episode, of course, you got to watch the data closely all the way through. That kind of episode is possible that we'll have it again.
And I'm so happy you mentioned Alan Greenspan. I love the fact that you worked with Greenspan. And one of the things that Alan Greenspan used to say all the time as chairman of the Fed was there's a real wealth effect as well. So do you read into that wealth effect today? Because look at where we are in the stock market. I don't think you could, ignore the fact that the stock market has been in a melt-up scenario all year on President Trump's term. And does that enable people to feel better and put more money to work in terms of investing and consumption?
Right. It's all actually simultaneous. So the people who actually own the S&P 500 say they're really happy because they've got more wealth and they can feel comfortable buying things. But the reason the S&P 500 is up is that the customers of all those companies are buying a lot of their things and the companies are very profitable. We just had really, I think, the best positive surprise, earnings surprise quarter that we've ever seen in the last quarter because Americans are out there, living their lives to the fullest and helping firms be profitable and helping wages and wage growth go up. And so it's really like a very magic formula that was only disrupted really by the government shutdown. And now that we've got that behind us, that I think the sky's the limit.
Now, of course, you mentioned the president talking about the $18 trillion in investment that is coming into America as President Trump lures money from all over the world into the U.S. But we're also worried about the Supreme Court decision coming up. Back in April, there was all this hysteria about the president's tariffs. Now, people are afraid they're going to go away because it's so significant. The money raised already close to $300 billion. We're now in the window of when this decision can come any day. The Supreme Court held oral arguments on the legality of President Trump's use of the IEEPA, the emergency to impose tariffs. That happened exactly 1 month ago. Have you heard from SCOTUS yet?
No, we haven't heard it. I think we'll all hear it at the same time, but we're highly confident in really two things. The first thing is that we're right on the law. The president has the right to declare an emergency. Like, think about all the hundreds of thousands of people that have died because of fentanyl, for example. He has full authority to declare an emergency, and he also has full authority to regulate trade if he sees there's an emergency. And how else are you going to regulate trade but through a tariff or a quota? And so we feel like on the law we're very, very strong. But even if the Supreme Court disagrees with us, we have a backup plan that'll get these things in place right away. Jameson Greer and Howard Lutnick and Secretary Bessent have been talking about it, day and night, as you know. And so, we're going to win either way. The American people are going to win either way.
Well, I spoke to President Trump about it, and he made the point that, look, we're going to have to pay back money if this doesn't go our way. Here's the president with me just 2 months ago. Watch.
What is your backup plan should the Supreme Court decision go against you on the tariffs and the emergency
Well, I'll have to figure something out. I don't want to even think about it. We're doing so well to think about it. If that happened, we'd have to pay back money. So if anything would happen with that, that would mean they're allowed to use tariffs and we're not. If they took away, this is national security, if they took away tariffs, then they've taken away our national security.
So I know that you're confident the decision goes your way, Kevin, but if it doesn't, you said you have backup plans. What is it? Is it like Section 301 or 232 or what?
Exactly, 232s, 301s, that all those numbers that, it's kind of make your head spin sometimes. But the bottom line is the president is exactly right about, during your clip right there, that if the Supreme Court says, hey, you got to take the $300 billion and you got to refund it, it's a massive economic disruption. And then moving forward, we have lots of plans for 301s and 232s so that we can reproduce what we've done with other authorities. But he is correct that you're looking at a really massive disruption, a massive disruption that the Supreme Court needs to take seriously as we look forward to the decision.
Yeah. Now, yesterday or this week, Treasury Secretary Scott Bessent has been pushing for new Federal Reserve regulations requiring regional bank presidents live in their districts for 3 years. I want to get your take on this because the secretary said that the Fed board could potentially veto regional Fed presidents if implemented. This rule gives Washington more sway, certainly, in fiscal policy. Is the president planning to veto Reserve Bank presidents who have not lived in their district for at least 3 years, Kevin?
I've not discussed that with him, but I think that what Secretary Bessent said is exactly consistent with the 1913 Act that created the Federal Reserve, that the reason we have all these regional feds is that we want to make sure that we have a federalist system where the different regions in the country that have different concerns, like it could be a place where you care a lot about agriculture or where you care a lot about energy, that those places have a voice at the table. And the unfortunate thing about the current design of the Federal Reserve is that the only folks who always get a vote on interest rates are the people who live in Washington and the people who live in New York. And it's something that Secretary Bessent and I have been talking about. And I think it wouldn't require anybody to go in and fire anybody who's there now. But going forward, being respectful of the original design of the Fed, which helps provide the independence you need because you've got regional variance across like who's actually making the decisions. I think it's a good idea.
So, would it derail the expected February approval of the 12 regional Reserve Bank presidents to 5-year terms?
That's something I've not discussed with everybody yet.
Kevin, let me move on to the president's affordability push. He's going on a trip, and he's going to be traveling the country beginning next week to really tout some of these economic wins. What do you want to say to those people who talk about affordability being a real challenge and the fact that they understand President Trump trying to rein in prices, but there are some prices that are still higher than what they want?
Right. Well, we understand why people are still frustrated. We understand that, like, if a typical person buying a home saw their monthly mortgage payment go up by more than $1,000, grocery prices, a typical family's grocery bag went from about $400 to $525 a month. And so all that happened under Joe Biden. And now we're getting inflation under control. We're getting wage growth to grow again. People's spending power is up about $1,200 so far this year after dropping $3,000 under Joe Biden. And so we're making progress, but it's going to take a little bit more time to get the hole that Biden dug to be completely filled. But we're going to do it. We're highly confident we're going to do it. And the numbers that you and I have been talking about this morning highlight why people should be so optimistic that we'll be successful.
Absolutely. And, I wonder if you're going to see this road, the Housing Act, part of the NDAA. I mean, housing is one of the areas that people are concerned about because of where mortgage rates are. So will we see that enactment, and that would be positive for manufacturing and housing, right?
Right. It's a really strong first move in housing, but the president has basically instructed all of his advisors to work overtime on a second round of things to make housing more affordable. In fact, we've got meetings today about that. But yeah, we think that Congress has got a lot of really good ideas. Senator Scott has been pushing, and that we absolutely think that it'd be great if that got passed. But we're not done making housing more affordable.
So what should we expect from the president traveling the country this next week and beyond, talking about some of his economic wins, Kevin?
Well, I mean, there have been so many wins to talk about that I think it's just going to be a great time. He's the best communicator I've ever seen. There's going to be a great time for him to go out there and just talk about, like, we could say one thing that we've got 18 trillion in new factories being built, but now we've actually got the groundbreakings that we could report on. And so I think that people are going to be really impressed with the progress that we're making, and it's going to be very, very impressive data as well. And so I think that because the president is on fast forward and he's solving, it seems, all the world's problems, stopping wars and everything else, that that it's time now to spend a little bit of time reminding people about all the progress we've made on the economy, and that's what he's going to do.
While also rolling back some of the Biden-era fuel efficiency regulations, making cars more affordable. This was the topic this week to try to increase production, right? The president launched a nationwide affordability push, announcing the creation of the Trump accounts for newborns. Kevin, I got to tell you, I love this story. I love this idea. Having kids understand saving and investing from a very young age. How significant will this be on American families?
I think that both of the things you mentioned are amongst the most significant things that the president, looking back, will think about as his great accomplishments. Because what he did with the Trump account is he made it so that every kid, when they're born in America, basically gets a share of the pie. They get a piece of the action. They get money put into a broad-based index fund so that they get to feel like they're part of the capitalist system. They're part of the economy that's making us all so rich. And not only that, but they'll be saying, oh, I own $50 worth of Apple, like when they can look at the companies in the index funds themselves. And then we get Michael Dell, who comes through. And what President Trump had us do, by the way, Maria, it was underappreciated, is that we didn't just make accounts for the people who were born this year. We made accounts for everybody who's 18 and under, so that these accounts would be available for all children in America. But we put the $1,000 in every year for the newborns. And Michael Dell came out with $6.2 billion that he said, you know what, for everybody 10 and under, I'm going to give them all $250. And he's doing that to 25 million people. And since Michael Dell did that, we've got people, wealthy people from all over the country ringing our phones off the hook saying, hey, we want to do that too. And so it's a new model. It's a new platform for making society more just, but doing so voluntarily with the well-earned profits of America's philanthropists.
I think it's just terrific. I really do. Look,
really
I'm reading a Piper Sandler report this morning, Kevin, and the analyst there says tariff revenues are coming in light. We think the deficit is going to become an issue next year. Most estimates of the president's tariffs find the effective rate should be 17%, and this would imply $470 billion in new revenues. However, new tariff revenues have topped out at about $280 billion on an annualized basis. Your thoughts?
Right. Well, we've got a heck of a lot of tariff revenue coming in, and we've got a heck of a lot of production coming into the country. And so there'll be, as the data move forward, there'll be some, uncertainty about how much do we have to change our forecast for tariffs, because we've created so many jobs in the U.S. But I remind you that when we make those jobs in the U.S., that those people get high wages, they pay taxes. It's not a negative for the deficit. So either way, America wins. And I think, it depends really on how fast we can onshore American production, which has been the main priority of the president.
Yeah, I mean, I just think all of a sudden the Democrats have found a way to get affordability stick to their brand. And Kevin, President Trump came into office with this priority of getting inflation down. Let's not forget, we were at 40-year highs under Joe Biden.
Right.
How is it possible that the Democrats have been able to rally around this word, affordability, and make people think that that's what they're focused on and not what the Republicans are focused on going into an election year?
Right. It's just what happens sometimes when, one political party has a lot of the media echoing what they're saying. But the bottom line is look back at the thing that you just mentioned, the fuel economy standards, that Joe Biden's team was set to say that it had to be 51 miles per gallon on average for cars in America. We went around D.C. and went to car dealers and said, what's the highest gas mileage car you have? And the most efficient car we found was 36 miles per gallon. It was a Honda. So that means that under Joe Biden's America, in just a few years, there's no internal combustion engine car that can be produced in America that meets their standards. And so what they did then, when you didn't meet their standards, is they hit the car companies with billion-dollar fines. And those billion-dollar fines, of course, were passed through as higher prices for cars for Americans and so on. So that there's lots and lots of things that we could do to reduce the problem of affordability. But the affordability problem is 100% created by the Biden administration with their runaway regulation and their runaway inflation.
And let me just end on health care, because the president there as well coming up with this most favored nation status and dropping prices on prescription drug also fits right into your affordability theme. Do you have an opinion on what you want to see here with these Obamacare subsidies expiring at year end? I know that the House bill and the Senate Democrats are pushing 3 years. Extending these for 3 years is what Chuck Schumer wants, Kevin.
Well, we'll see where it ends up. President Trump had a great plan to give lots of money to rural hospitals, to have most favored nation treatment for drugs, and to have cost-sharing payments to Americans that need health care. And those cost-sharing payments, which aren't Obamacare, were vetoed by the Democrats or by the parliamentarian. But the thing I want to remind you is that the president has a proven track record on affordability and health care, and it's this. If you go back and look at our first term, when we came in and we started to negotiate with the drug companies and make sure that the FDA was approving generic drugs, we had 2 years in a row where the consumer price index for drugs went negative. We had declining drug prices. The only 2 years that happened, going all the way back to World War II. We did it then. We'll do it again.
Yeah. Kevin, I've got to tell you, it's been a beautiful shot behind you. I love talking with you with the gorgeous snow at the White House right behind you. I want to thank you for talking with me for this time while we watch the snow behind you. I'm sure it's cold there. Thank you, sir.
Yeah, thank you. Bye-bye.
All right, Kevin Hassett at the White House this morning. We'll be right back. Stay with us.